Okay, Monday morning stock charts. Let's get right into it. We're going to look at some of the indices, some of the stocks and trade ideas that I floated out there, and we'll wrap up. Anyone who's following me along, this is not trading advice. It's just my own opinion on this channel. So follow, trade at your own risk. And if you're new and you want to learn how to read charts and use technical analysis to help you find charts and then understand how to manage trades, take my course. Link is in the description below. It's a $99 course and it's about 5 to 6 hours worth of training. I think that's a pretty good value. So check it out if you haven't already looked at it. Let's get right into it. Triple Qs here, starting out with large cap tech. So we're looking at an hourly chart. All right, so I don't see any sell signals yet. Here's what we got going on. We had this upward price channel right here, and we broke to the upside of that channel, and we've just been trading kind of above it. Now, this morning they made it look like they were that it was gonna start to run away from this channel to the upside, but you can see a pretty big impulsive rejection candle back down in the area. So I'm not so sure, that they're gonna actually be able to run away. This might sell off and just hold within this price channel. Looking at the daily chart, I am expecting a sizable correction or possibly a lot more. And why? Well, look at the negative divergence on the daily chart on the PPO and the RSI. See how momentum is fading where every time we make a new higher price up in here, we're doing it on less momentum. So momentum is fading. That is true. Price continues to move higher. So these are divergent highs, divergent high prices, which have a higher probability of failing. Doesn't mean they have to. You can continue to run higher and then burn through the divergences and make a new high on momentum. But until that shows up, these divergent highs have a high probability of failing. So what am I waiting for? Well, I'm waiting for a sell signal. I'm waiting for an impulsive breakdown, specifically on the daily chart too. If the daily chart's the larger time frame, that will give us a better sell signal. So some sort of impulsive breakdown of price support. Right now we got price support sitting right around 323. Ideally, I'm probably going to wait for this lower trend line down here, which is right around 315 or so. A daily close below that would be the sell signal that I'm really looking for. And then we'd want to see the SPY breaking down at the same time. So here's the SPY, and you can see the dip buyers stepped in this morning. Looking at the hourly chart, we started to break down right here, and this hour was below here, but again, you want to wait for the hourly close. We didn't get the hourly close below this trend line. This trend line is your price support. Here's your price channel right there. You had lots of whipsaws though in this market. You had a false breakdown here, false breakdown there, false breakdown there. So the dip buyers have succeeded in creating 3 bear traps on this. Today, you can see it was all the way down here at one point during this hourly candle, but they stepped in, bought it up, and closed it right at support. So again, whipsaw signal. That's why you want to wait for an hourly breakdown. The more impulsive, the better. And this was not a sell signal until you got that hourly close, which you didn't get. So now it's still above support. So again, no sell signals on the major indices that I see as of right now. One thing to also take note of though, look at volatility. It's not falling. So the market continues to make new divergent highs, higher prices on less momentum, and volatility is just hanging in there. We're just kind of baselining. This is UVXY, kind of a leveraged volatility play. But again, they do their best to track the VIX, and because you can't actually buy the VIX directly, you have to buy it through some proxy. And you can see here that basically we're just hanging in there. That it's just holding this support area at 1032. So volatility, bullish divergence. See the bullish momentum? We keep making higher highs in momentum, and we on the PPO and the RSI, and the price continues to make kind of lower lows. That's why it's divergent. All right, price is diverging from momentum. Momentum's a leading indicator. Typically momentum leads price. So you see the momentum start to turn up first, then price will follow, or vice versa. Momentum will turn down, then price will follow. So again, just something to note, volatility is not falling. Another thing to look at the bond market. TLT is actually catching a pretty good bid today. Here's the long bond, TLT, and they're stepping in and buying it up. So that's a good size, that's a good move. A 1% move in the long bond is a good size move. Remember, the bond market's like 10 times larger than the stock market. So it's a lot of money in there in that bond market. So when you see moves that are 1%, you just have to understand the amount of money that has gone in to make that thing move. Now, the bonds do have, all right, they don't have bullish divergence on the daily chart. They are just bullish on the momentum. So you see the momentum right there. Momentum's moving higher, and price from that low has been moving higher as well. So momentum, bullish momentum, not there was no divergence though on the daily. That's what tells me that this move, the momentum could carry TLT higher, but without that bullish divergence, I don't know. I would have liked to seen the bullish divergence on this. Looking at the hourly, we did have bullish divergence here on the hourly. It showed up. It really showed up right. Let me just kind of narrow this down just to show you guys exactly where it showed up. Right there. See how the price right there is just moving lower and lower and lower, and yet momentum was going higher and higher and higher. So that's your bullish divergence. Momentum moving up on the hourly, price still moving down. There's your breakout. Boom. It was with a gap up too. So breakout, kind of a back test, didn't fully back test, consolidate sideways, and now we're starting to break higher. So again, the long bond looks like it's going to move higher. Rates should come down. And what does that do? And here's, rates are coming down right now. So then we look at the financials. What's happening in the financials? All right, so here's XLF, financial ETF. All right, so because the financials are trading hot, moving higher recently on this reflation trade where interest rates are going to go up. The reality is that the market can't sustain higher rates. So what's likely to happen is as interest rates rise, markets will sell off and the bond market will push higher, causing rates to come down. It's kind of a self-equalizing mechanism at this point because rates can't really go too high. If they go high, markets sell off, people are going to rush into the bond. Only, when you see the bond market and the stock market selling off at the same time, run for cover. But as of right now, we still have that, mechanism where the stocks sell off, bonds go higher. So bonds are moving higher, stocks are kind of selling off a little bit today. Nothing impulsive. And XLF is coming down to what looks like support. So we're going to watch this level down here at this trend line right here, about $29.50 or so, depending on when we get there, $30. That's going back to 2011 right there. And this is your support line. So this is your bull market in financials. You've got lots of reactions. There's one, there's another, lots of reactions, and then reactions from below. Impulsively broke, back test, and then we broke above again. So again, if it holds here, okay, maybe we're starting another bull market or continuing the former bull market. And all this price action over the last year or so was a bear trap. But I think what's more likely is this is a false breakout. So I think it's likely we're going to come down to this support line. We'll consolidate here. We'll probably get a little bounce, maybe a bounce back up to 30, 50 or so. And then we're going to look for this to break. That's what I'm anticipating this to do. Obviously, until you see it, there's not necessarily a sell signal from these levels, but I'm going to be looking for it. On the daily, you can see negative divergence on the PPO right there. No negative divergence on the RSI. So again, conflicting momentum indicators there, and we're coming down into close support. So looking for a reaction, a bounce off of this. But then we're going to watch for how this, I'm looking for it to break. Let's take a look at so Citi is the proxy that I use to short the financials right now. And you can see it's down, almost 3% basically. It's one of the, it's selling off pretty good and, continuing to sell off. So this chart here's your negative divergence on the daily right there. See it? And got it on the PPO as well. So this price action all through here was divergent high price action. And this is what I was talking about. What, you know, when you're shorting something with divergence into resistance, don't expect it to just work for you from day one. You know, you enter the trade and all of a sudden you're profitable. It's not how it works. Typically, you enter a trade, it goes against you a little bit because when you're entering trades like this, you're going against the momentum. And so the momentum obviously was very strong to the upside, but negative divergence showed up telling me we're about to have a reversal. So, you know, I took the short trade. There's still a little momentum left. The trade goes against you a little bit, and then it starts to work for you. So now you can see, obviously, this was the level. Here's my stop. My stop was up here, you know, around $70, or, you know, it's up here at oh, where is it? It's at 70, 60, or 70, 70 right in there. And this was the resistance line I was keying off of, 68, 61. What did we do? We popped through it, you know, on one day we popped through it, closed above it, and all selling since. So lots of selling. Now what's happened on City looks like a false breakdown or a false breakout to me. We're going to have to watch it. But here's your 2011 lows right there. So you can see as we come up, we held support here, held support right here, and then we broke, and here's your breakdown. We gapped and sold off, came back up, you know, went above it just briefly, sold off again, came up above that trend line, and now we're back below it. So looking for this to continue to the downside, but, you know, I could see us getting a bounce here. We could have a bounce up, back up, tag resistance, which is up around 60, 61.50. Dual resistance up there now because you also have this island cluster top right up in here, which is at like 61.80. And yeah, 61.50 to 61.80, you've got dual resistance now, and we have broken down below those. So a tag back up into that is dual resistance. Should get rejected there. Let's take a look at energy. Again, this is one of those reflation trades that is really what the second half of 2020 was really about, this reflation. The market's going to come back online and everything's going to be great. That's basically the narrative. But we're not seeing that in energy. So XLE, you know, if the market's going to come back online and the economy is going to come back online, oil demand will increase. Maybe that still will take place and maybe oil demand will increase. But in that scenario, the market is saying there's going to be a lot of supply, I guess, as well. What I think it's saying is that there's not going to be that kind of demand. And you can see here that XLE down another 1.5%, a little bit more, and continuing to sell off. So XLE, there's your island cluster top reversal. So that was your resistance line. These blue lines, I had these marked out a long time ago. And I said we could easily, I said what I would look for it to do is trade up to about 44.79. As you zoom in, you can see, look what we did on the hourly. Just a couple hours above that, really 1 hour above that. And then it closed below, gap down, and it's been selling ever since. So that resistance held. That's pretty obvious now. And the more obvious it becomes to more people, then, you know, the selling will increase. I think it's very likely at this point, if I go to the daily, you can see on energy, negative divergence right here on the RSI, negative divergence on the PPO. So that was all forecasting that we're about to have a reversal. I think at this point, it's likely that XLE heads down the 200 days right here, but it looks like it's going to start pointing down. I think we're heading down to 34, right around 34.50, somewhere right in there. And at that point, you know, we'll look for longs potentially and see what that does. Okay, sorry guys, had to take a quick meeting. But the XLE, all right, so looks weak, and I'm expecting further weakness. The divergences are set up for us to go lower. Let's look at this Nike trade. I pointed this one out. This is continuing to work, and it's just getting started basically, but on Nike, you can see here, coming off the March 2020 lows, we've got this trend line that we've been walking up. Just recently broke the trend line as I zoom in. There's your breakdown. This green candle is your back test of trend line support, or trend line resistance, and impulsively continuing to sell off lower. So I think we're heading lower on this one. This was also forecasted with the negative divergences on the daily and on the RSI and the PPO. So you can see all this price action all through here, which is really this wedge, the entire wedge, has been divergent high price action, setting us up for a move to the downside. One way to measure this is, you could take the widest part of the wedge. It's not that big of a wedge, but maybe that gets us down to this 130.82. It doesn't look like a lot because I use log scaling. So anybody that's trying to mimic my charts, you're going to want to set everything to log scaling. But, from the high to the low, that's a drop so far of 8%. Down to here, it's a drop of 10, 11%. I think we're going a lot lower in this one, though. I don't know exactly how often. I don't know how long it's going to take. But one thing that I'm watching is if I roll out on Nike, the longer term chart on Nike coming off the 2009 lows, which really is your bull market. All right, this is your bull market over the last 11 years, 12 years basically in Nike. And we had one undercut. What's this one? 2017. But this is the drop that we just recently had where the Fed stepped in and saved that one. But I think, and we've really run up quite a bit from those lows, I think it's very probable that we potentially work our way lower over time and come back to this trend line, this bull market trend line. I don't know when it'll hit or if it'll do that, but that's kind of what I'm looking for on this one. So as we start to come down, we've got a gap right here, a big gap, and it was never filled. So I think if we come down, we'll fill this gap and probably get a reaction down here around 117.55, and likely get a bounce there. So I would be looking to hold some of the trade down to this trend line if or when we get down there. Okay, Chewy. So what do we have on this one? Well, starting off on the daily chart, we have negative divergence. That's pretty clean and clear, obvious negative divergence. We have an upward price channel coming off the March 2020 lows. So just kind of been rocketing up that price channel. But we've gotten away from it a little bit, and we now have negative divergence. So at a minimum, I think we're going to head down to this trend line down here, around $83 or so. Again, it depends on when you get there. If you go to the hourly chart, you can see this is kind of a short-term price support that we had, and we just recently broke that. So we're not impulsively breaking down yet, but we're starting to head lower. And this negative divergence tells me that because the momentum's drying up, I think we're likely to come down to that trend line that I pointed out. So as of right now, for me, the trade is just to cover down here at this trend line support. All right, moving on. Etsy. Again, another high-flying momentum stocks. And again, what I'm looking for is the momentum to fade because there's going to be a really good trade when the momentum fades. And so I'm looking for signs that it is. Etsy has negative divergence, not as clean as the Chewy one, but we have been making basically equal or lower highs in the RSI. And on the PPO, if I can get that line tool, we do have clean and clear negative divergence. So all this has been divergent high price action. Now zooming in, you can see what we have going on. We have this trend line, kind of the secondary trend line that we created, broke, been back testing several days, and now we're kind of starting to weaken, but again, it's not definitive enough, so we want to see a little more downside to set this thing in motion. Peloton. So again, I talked about this one. I am short this. However, I covered half of my short position the other day right here when we recovered that trend line support. So you can see this candle. We started to break. Looked like we had that sell signal, but then they bounced up and kind of recovered it. So that was a signal to me that this thing wanted to make another leg higher. Looking at the daily, you've got this uptrend line right here. We broke, but we did not have negative divergence. Even when we broke and got the sell signal, there was no negative divergence. We then ramped all the way up to here. This is your earnings. Or no, sorry, this was news that they were buying some other company. So the thing was up like 10% in a day. And this is where I took my short position at. So then it's, started to sell off, and ultimately I'm looking for a break of this trend line support. We started to break it here, but when they recovered it, I covered half my short position, looking to add back that additional short position on the next definitive break of this trend line support. So until that happens, this is above support. Here's Zillow Group. I'm still short this for a starting short position, nothing huge. But what do we have? Well, March 2020 lows. We've got an uptrend line. We broke right here. There was no negative divergence on the break. So then we had a back test and made a new marginal high, and that put in negative divergence right there. So lower momentum and higher price. And each one of these new highs, this is all divergent high price action. So I've got a starting short position. I'll add to the short on a break of, really at this point, if you zoom into the hourly, we've got this uptrend channel, this upward price support trend line that this thing's been holding pretty cleanly. We also have some support that it looks like about 147.22. I think a definitive break of that 147 and get that hourly close below there would be the next sell signal that I'd be looking to add to my short position. All right, Tesla. Lots of people are in Tesla. It's still holding support, and so here's the trend line in Tesla coming off. This is really coming off the November 17th, 16th lows, and we've just been walking up this trend line. There's been no definitive breaks of this, but Tesla's really lost a lot of its momentum. You can see for about 2 weeks it's just gone sideways, and then today we basically opened and we came down and hit that support, and then they bought it up, but then they've sold it. So it's still just kind of hanging out there. No definitive breakouts really to the upside, but not breaking down either. Looking at the daily chart, we have this entire price action here has been divergent high price action. So again, you don't want to just get short because something has a divergence, a negative divergence. That's not a reason to say, okay, I'm going to short it. There's negative divergence, because obviously you would have gotten destroyed here in Tesla. You want to look for breaks of trendline support and whatnot. So we did have a break right here. Not that impulsive though. So look for that impulsive breakdown of trendline support. Here's your trendline support now. Looking for that impulsive breakdown till it shows up. You just have to wait for it. I want to point this one out. I think I talked about this in the past. Southern Copper Corporation, SCCO. So this is a copper miner. Copper's been on a tear. Again, copper is part of that reflation trade. Everything's really, the market's just betting on reflation. The market has just been buying it because they think it's real, but it doesn't necessarily mean that's going to happen. So this trade could completely reverse. And so you want to watch for that, signs of that. On SCCO, we have an uptrend line coming off the March lows. Been walking up that. We then broke trend here. And there really was no negative divergence. Let me look. Yeah, I mean, there was from way back here, but nothing that's really definitive. So it didn't look like negative divergence. Now, when we've created the secondary trend line here, been walking up this trend line now. And as you zoom in, you can see we're starting to break. Tried to, Friday it looked like they were going to break, but they recovered it. And now today it looks like they're starting to break down. Again, you want to see this become more impulsive. So you look for impulsive selling, on the 1 minute candle. If you saw it really starting to come down, that would be your sell signal for this to come down. And yeah, we do have negative divergence here. Equal high with slightly new higher highs right there. So negative divergence. And so again, I'm just waiting for that impulsive selling. If it doesn't show up, and they close it close to the trend line, it's not good enough. It needs to be an impulsive breakdown. Okay, and we'll wrap up with the dollar. Again, I look at dollar futures and the DXY. The DXY is it's got the euro in it. So the dollar futures, I think, is another thing to watch. On the dollar, you can see, the dollar was going higher today, and the stock market started to sell off. The dollar's selling off now, and the market's kind of hanging in there. So again, I think the entire market is hinged to the dollar at this point. If the dollar rises substantially, look for stocks to sell off. Gold is showing signs of weakness, so I think the dollar is going to catch that move up. and markets are going to come down. But until you see it, right now, here's the pattern that we got on the DXY. On the daily chart, we have a bullish falling wedge right there. There's the apex of the wedge. At the apex of the wedge, we put in bullish divergence right there. So there's your bullish divergence. We broke out and we've been consolidating, which looks to me like we're building energy for the next leg higher in the dollar. So that's what I'm looking for. The dollar probably to move up to this 92 area. From there, we'll see, but I think 92 is probably very likely. And if we get up to 92, look for the markets to sell off. Here's gold real quick. Sorry, that's Barrett gold. Let's look at gold bullion. And you can see here, we're still hanging in there, but we're just kind of sideways, right along this support line, just going nowhere. So until we see some sort of breakdown, this is just sideways. The market's just kind of deciding what it wants to do. It is at support, if you look at the daily chart, you've got this downtrend line here. We broke above it and came down. We've been holding, we're not quite at support. Support's about 18.18, so a little bit lower, but we're still kind of in that area. So again, just got to continue to watch what this does. If gold moves higher substantially, it's going to do it on one of two, or probably two different things. One is maybe the dollar's selling off, so gold's catching a bid there, or potentially gold's catching a flight to safety bid because the markets are selling off and everyone's rushing to safety, which would be probably gold and bonds. So things to watch for. Just wanted to point that out. Leave me a thumbs up if you guys find some value. I'm going to leave it here, and I'll catch you guys at the next one. Bye.